John, let's jump into our topics. What's going on in this interest rate environment? They had to have gone up. They have to have gone up by now. They can't they can't stay low forever. What's up?
That's what you would have thought. And certainly they did go up in the middle of February pretty drastically. Still low, but went way up. But what we've seen over the last 6 weeks is a steady decline to the point that we are almost as low as we were at the lowest points we had seen. So it is an extremely great environment to finance mortgage loans. And one key note to that is folks that are thinking about refinancing.
Right.
The federal agencies that kind of dictate how interest rates are structured, they added some fees to their interest rates last fall that made it a little more expensive for folks to refinance.
Called a adverse
market fee.
Yeah. Now, I heard that might be going away, or is that only on?
It did go away.
It did.
Can you believe it?
It did.
It did just recently, and we were already seeing it on our rate sheets, and that's made it a lot more affordable to refinance for folks that were kind of on the edge.
Yeah.
So for your listeners, if they kind of checked into refinancing over the last year, and it just didn't quite make sense, well, they need to call us and run those numbers again, because it might this time.
The adverse market, whatever the heck it was called, I'm sorry, you just said it. I can't. You'd think I could pay attention to you well enough to remember what you said. It was 0.5% of the loan amount. It was a what? It was based on some percentage of something.
0.375. In other words, apples to apples, the exact same interest rate. It would have cost somebody 0.375% of the loan amount more in closing cost a week ago than it does today.
So how long will interest rates stay low, Mr. Burchfield? What does your crystal ball say, sir?
I'm wrong every time I say this. Interest rates are going to, it all depends on your definition of low. I think that's the key.
So let's define it as low being what they are today. Now, you and I both know that the average historic rate over time is closer to 6%, maybe a little above, maybe a little bit below, but it's somewhere around 6. But how long will they stay low? And I think you know the answer to the question. It's just you have to answer the question with a question. Basically.
I have to hedge my bet. Yeah, for sure. If I was a betting man, I would say that we would stay in the low 3s,
yep,
maybe lower,
yep,
for the next 6 to 12 months.
When things are good around the world, interest rates will always be higher. And I think that's an accurate blanket statement. And for people who
100%
who don't,
and that's what we've seen over the last 6 weeks is that there's more uncertainty. We think about the COVID environment that drove interest rates so low. Well, in the U.S., we're doing fairly well still. Right. Although there's some concerns, but worldwide, there are a lot of countries that haven't gotten an opportunity to distribute the vaccine at the levels that we have, and those countries are having some major issues, and that trickles all the way down to our interest rates.